Good afternoon, everybody, and welcome to your Daily Market Insight video here on Monday, February 28th. This is Hunter Mozingo coming to you about 50 minutes after the market close here in Jacksonville, Florida, 4:52 p.m. Eastern Time to be exact. And today we're going to talk about the overnight or over the weekend gap down we saw in the equities market and whether or not they were able to find support and hang in there. Additionally, we're going to break down the sectors a little bit more than we normally do. We're going to look at some of the leading sectors from the last couple of days in a little bit more detail. We're going to look at some of the best growth stocks out there, and we're going to look at some of the laggards from today too. So let's go ahead and get right into it. What just happened? Like I said, overnight gap down, but the indices recover from the lows. So we continue to see relative strength and growth, at least on a near-term basis the last several days here, showing some relative strength today again, up 0.8%. roughly versus the S&P being down 0.25%, Q's up 0.3%, Dow down about 0.5%, mid caps basically flat, Russell 2000 up 0.35%, World 60/40 down 0.14%, and the Growtex Composite down 0.12%. So really a mixed day as far as the markets goes. Like I said, we do finish off the lows, but the Dow, the big laggard, as you can see here, growth kind of leading the way. We saw the growth ETF show some relative strength, get over their Friday highs early this morning. So starting to see a little bit of divergence, growth showing some relative strength recently. But for all intents and purposes, although it was choppy, a pretty healthy digestion day. And we're going to get into that, what that looked like here in just a second. Market state remains in consolidation. We're now on rally day 3, and now starting tomorrow and moving forward, we're looking for a follow-through day. Market trend, there is no changes here. As you can see, market leaders remains neutral. We're not back above these on the Qs and the S&P. We do have IWM and MDY trying to stay above their 21. That's why you see this moved a little farther over to the right, but no changes to the trend gauge as of now. And quickly, before we get into the tail of the tape, which I'm going to be doing in the exact same format as Don, we're going to talk about Revere for a second. So as I always do, let me highlight this. This is me in the middle. This is my email. If you have any questions about a stock, a sector, something I said, a key level, doesn't matter, feel free to send me an email. I'll happily respond. Or if you're interested in what Revere does, what our strategy is, you can email me or anybody here, Dan, Tim, Merrill, or Don at revereasset.com. So let's go to the tail of the tape. And we already talked about market state. So headwinds, those remain the same. And we've certainly got Russia and Ukraine dominating as far as headlines go. So before this whole Russia-Ukraine thing, obviously the focus was the Fed, what's going to happen with interest rates, etc. Now the focus has shifted off of that a good bit, and it's Russia and Ukraine headlines really dominating the markets right now. So these are not really going anywhere. Stronger dollar, continued inflation, Fed taper, potentially rising interest rates, and now the dragon or the head of the beast here, Russia and Ukraine. Very big deal, obviously, geopolitically, and the markets think it's a big deal too, evidenced by the gap down overnight that we saw in the market. So sentiment-wise, put call 0.93. We did see a slight change here on the put call in the sense that it opened around 0.9 below 1, and we didn't see an immediate spike back up above 1. That's something we've become pretty accustomed to seeing over the last month to month and a half. So although it's just one day, a slight change in character for the CPC. The VIX hit a high of 33.5 early this morning near the lows on the market, but finished right around 30. As you can see, still very elevated, and just another signal that there is a lot of fear and volatility in the market. Fear and greed right at a 24, also an extreme fear signal here from the fear and greed index. So still tons of fear out there. That's evidenced here by these sentiment indicators. The sentiment is not good right now, and the chart reflects that. Bull case, like Don has said, we have not reclaimed this 200 SMA yet, but we're working on it. We had the initiate a rally part of this started on 224, like Don has listed here. News-wise, overnight gap down about 2.5% on the S&P, like I said earlier, on SWIFT, which is some of the banking sanctions, as well as additional economic sanctions hitting the Russian markets and the ruble, which is their currency. So lots of stuff going on over the weekend. Market didn't seem to like it at first. A big gap down when the futures opened yesterday, but we recovered a good bit of that off the lows as we approach approached the actual open this morning. And then obviously as the actual day session went on, we got back even more of that gap down, finished even closer to getting back to even on the S&P, that kind of thing. So what we were watching this morning was, can this young rally shake off this overnight gap down or this overnight weakness, right? And ultimately we did see that. You see I have a black check mark here. That's because we didn't get a green close on all the indices. It was kind of a mixed day, but we did see all the indices well off the lows. So that's why you have a black check mark here. Action wise, like I said, it was a choppy day, but we opened down 1.2% pretty quickly. We rallied up to flat on the S&P, but around noon, we reversed and started to trend down. However, we had a strong close really about the last 30 minutes of the day. And here I will pull up a 5-minute chart so you can see what that looks like here. So here is, we opened down about 1.2% right here. We rally up to flat. This is around lunchtime here, 12 o'clock-ish. And then we trend down for the rest of the day, but we end up having a nice close. So just to put a visual to what I am describing to you here on the tail of the tape, moving forward, just notes, third day up off the lows, completely normal to see some weakness or to see some digestion. So that's maybe what you want to call today. Sorry, I keep making that pop off the screen there, but pretty normal to see this type of action after a really strong bounce off the lows. Bottom line from my standpoint is choppy intraday action, but we're digesting a massive 2-day rally and bounce. So completely normal. Now what I'm really concerned with or paying attention to is, how do we progress this week? Are we able to stay above certain key levels, so on and so forth? So I've already gone over these here, but I will highlight this. We opened down 1.2 on the S&P, closed down 0.26%. So recovered the majority of that by the end of the day. I already talked about the G6 60/40 and grow. Portfolio wise, we opened the day with a beta of 0.9, ended with a beta of 0.1. That is because we sold QQQ, took some profits there, and then sold EXPE for essentially break even, as this was pulling back in, showing some some bad signs, as well as some peers in its group not acting the best either. We did buy HWM, which is a steel and aero and defense company, excuse me, and we did add 2 docs. So we're going to go over those once we get to the charts here in just a second. Sector wise, aerospace and defense, gold, solar, cybersecurity, uranium, metals and mining, bonds, all strong today. And when I say bonds, it means like TLT had a nice day today, meaning rates were down. Bad days as far as sector goes, reopening like the Jets ETF, airlines, Expedia, those types of names not having a good day. Semiconductors, staples, and real estate, some other sectors not having a great day. So I'm not going to spend a ton of time here on these, but I do want to highlight one change in specific. We are now have our third weekly close below both of these areas. So really what that looks like, I'll show you here on a weekly chart. Let me pull this back and pull that back up for you guys. So basically that's your third weekly close below this area here, as you can see. So this is like 44.50-ish, right in where I'm holding here. And we're just kind of in no man's land here. You want to see us start working our way back up to potentially reclaiming these weekly moving averages here on the S&P. But I did want to show you that small update. We are still seeing the 21 be a declining moving average, as you can see here, right around 44.19 roughly. We are seeing the 50-day also continue to decline. We'd like to see those things turn the other way, start trending upwards as opposed to trending downwards. But as far as the charts, and we're just going to go ahead and get right here into, and let me take this off. This is actually from yesterday. I apologize. I meant to, oh, no, it's not. That's prior close. My apologies. Today's close, this really sums it up. Like I said, this is your prior close Friday. Like I said, a strong 2-day rally, digesting it today. So let's get right into it. We're going to look at the S&P here first. And one big thing I want to point out, and I've talked about it a lot, this 8 EMA, this light pink line, we did close above it today, and we got 2 consecutive closes above it, which is usually something you want to see after you've been living below it for a few days or some time here. So I wanted to point that out. That was my big takeaway coming into this morning is, okay, are we going to be able to either one, bounce off of that declining 8 or reclaim that 8-day exponential moving average? as the day wears on. Will we be able to close above that 8-day exponential moving average as the day wears on? And we did. So as you can see here, the S&P kind of defending this little area as more or less. This is a good spot to watch here, this 4,300 level, and then getting back above the 8. So a pretty positive day for the S&P. It didn't feel like it at times, but with a strong close, this ends up looking like a pretty healthy candle. We're going to move to the Qs here, and we're going to go pretty quickly. Qs, similar story. Open below the 8 EMA, but get back above it. We've talked about this 350 level being a really important spot for the Qs in the past. It still is. We want to see the Qs get above 350. We want to see it above the 21. And that is kind of the first step in getting out of the doghouse. After that, we got to start working on getting above some of these other moving averages and so on. So we'll move quickly to the Dow, which, as I mentioned, has been the weakest of the day, or of the group. Not quite back above the 8-day like the Qs and like the S&P. Not back above Friday's high either, which is something that's very interesting here on DIA. So as you could see on QQQ and SPY, here, I'll pull up the S&P for you. Oops, excuse me. Which S&P also maybe by just a tiny bit poked its head above yesterday's high, but not by much. Qs look a lot better, but DIA not above Friday's high. This is something you want to note. You want to point out stocks that got above Friday's high today. That's something that you could screen for. Let's go to IWM, pulling right back into the moving averages, but similarly above the 8 and above the 21 on a nice close here from the Russell, and it's going to look almost identical here on MDY, more or less bouncing off the 8, getting back above the 21. So like I said, a pretty healthy candle, pretty healthy day for the indices today. So real quick, before we get to the actual charts of some stocks, I do want to show you TNX, which is that 10-year yield. And look at this backing off of this 2 level, as you can see, poked its head above it a couple of times here, but backing off of that 2 level, coming back below this 21 EMA for the first time since the breakout really began here on the 10-year note. So that is something I wanted to point out to you. That could be part of the reason we're seeing growth stocks have a little bit of life recently. So let's get into the charts. Let's get into some of the sectors, like I said, and we're going to start with aerospace and defense. So as you can see, this has obviously gotten pretty vertical the last couple of days here, basically going from the bottom of a base to the top of a base in about 3 days. So really vertical move. We see the same kind of thing going on in cybersecurity and that type of area. But what I want to look at here is some of the top stocks in these groups, and I want to go through a handful of these sectors and show these to you. Granted, some of these are going to be extended, especially in the cybersecurity and the defense space. So first one here, Northrop Grumman. I know I've covered it before, but big time move today with big time volume, up 8% on 200% increase in volume. LHX is another name in here. Similar kind of candle, 8% on 130% above average volume. LMT, Lockheed Martin, another name in the group. Let's see if we can get that to load for us there. Lockheed Martin up 6% on 200% above average volume. So these have gotten very extended very quickly. And maybe, they eventually cool off, put in a flag, something along those lines, but massive relative strength to be expected given the geopolitical events, but massive strength from this aerospace and defense sector. Next sector that we've seen big time strength out of is XME. This is metals and mining. You can see the relative strength line going almost vertical here. Incredible relative strength over the last month. Some of the top names in this ETF we talk about a lot. Nucor, nice follow through today. FCX report, this is a copper company, similar follow through today, and not necessarily in the metals and mining space, but more so in the materials space, commodity space. This is NTR, Nutrien, similar candle to what we saw in the defense stocks, very vertical. Mosaic, also a very similar candle here, up about 6% too. So this sector, very, very, very strong as well. XOP, the oil and gas exploration ETF, one of the strongest of the sectors today. Some of the names in here we've talked about in exhaustion too. DVN, OXY, Occidental, FANG. There's tons in here that are acting really well. most of those up 3, 4, 5% or more today, like the ETF. And then lastly, I'm going to pull up this sector ETF for you here, cyber, and I want to show you some of these names as well. I know we've talked about CrowdStrike, we've talked about Cloudflare, but here's some names that are leading right now that are some of your less speculative cybersecurity names. So Palo Alto Networks, very similar in regards to the fact that it has gotten vertical the last 3 days, but pushing up right to 600. FTNT, Fortinet, also getting vertical, not quite to all-time highs, but big volume here on these as well. One last one for you, CHKP, Checkpoint Software, another one that's just absolutely going bonkers a little bit here. So cybersecurity plays very strong, or sector very strong. Oil and gas continues to be strong. Metals and mining, and aerospace and defense. Those 4 of your top sectors from the last week or so. But we are seeing some technology / growth show some life. So let me go and transition to that for a second. So I know this is not a splendid chart here as it is below the 200, but Upstart, massive volume on a gap up here, ended up filling that gap or coming all the way back, as you can see here, from 160 to 100, but on lighter volume. And then today, big time volume, big time close. As you can see, the last 3 days have had really nice volume and really nice price action, relative strength line hooking straight up. So Upstart, one of the top looking names out there in growth world. Another one, Datadog, which we do own in Grotection, just staying above the 8 EMA here. So really, this isn't anything out of the ordinary, maybe got a little ahead of itself, but the main thing is not giving all of this back, at least not yet. So Datadog holding above that 160 area. Docs, which we did add to today, up about 4%. You can see this one kind of rounding off and starting to come up the right side after consolidating. This one also has some attractive volume patterns. You see a volume pattern similar to this on a lot of growth names, where the last couple of days have had a lot more volume to the upside than the pullback from the days prior. So we did add to Docs today. AMD acting very well in the semiconductor group. SOX was really struggling today, but AMD was green for most of the day. SOX is the semiconductor ETF. Tesla up about 7 or 8% for the better part of the day, right up into this declining 21. If it can push through that, that could be a pretty big deal as you're starting to look at a potential DTL break as well. And lastly here, Bitcoin, holding on to its move today, really didn't give back anything as the day went on. Even when the S&P had pulled back a pretty good bit intraday, this did not. And lastly, before I get to some of the laggards today, I meant to mention this when I was on Aerospace and Defense. We did buy HWM today as it attempts to break out here at this 36 pivot, more or less. It ended up closing basically right on it, but big volume here, as well as making a run here at these at least 52-week highs here, 36 levels. So let's move to some of the laggards quickly. I mentioned we sold EXPE, and as you can see, it gapped down. Really, gap down is not the right word. It's just weak out of the gate today, along with some of its peers here. So BKNG, Booking, also very weak today, having just reported earnings. Airbnb, another one that was an earnings gap up that has really fallen apart, also weak today. So we got sold EXPE, just didn't really like how it was acting. I mentioned XLP, Consumer Staples, weak today. As you can see here, down about 2% or 1.5% by the time the day was over. But XLP and XLRE, real estate, 2 of the weakest sectors today. So real estate down about 2% today. Staples down about 1.5%. Some of the stocks that were weak today, LYVE, this was one that was hanging in there pretty solid, but just didn't finish well today, down about 4%. A couple more here, MasterCard and Visa, just not having a good day today either. Down about 2.5% here on MasterCard, and then Visa down about 1.5%, living below the moving averages there. So not a ton really to bring you on the negative side of things. I already mentioned, I'll show you SOX. I did mention this as one of the laggards today, but just like the indices, looked like it was a harsh rejection for the better part of the day, but ended up closing back above the 8 and right on the 200. So a lot of that today, things that didn't look so good in the middle of the day, looked a lot better by the end of the day. So that is going to wrap up today's video. I hope you enjoyed it. If you have any questions, any comments, like I said, send me an email. I'll be happy to respond. So thanks, everybody. I'll see you on Thursday's video and the podcast.